Share screen. Let's get this right screen up, shall we? Screen one. There we go.
A day in the life of a small business owner. Can you believe we're
Oh,
in May already? Time is going so fast and work is really starting to pick up.
there we go. Oh, all sorts kicking off here. The heck's going on? Bear with me 1 minute. There we go. By streaming on YouTube, it appears that every single thing that I had on YouTube was just all kicked off again. Right. Let's um, let's go over what we're doing yesterday. Let's first of all start off with the edge, and let's see where we're going. Oh, excuse me. Right, okay. So risk on today. Quite ATR today is 10. And on the FTSE DAX 40. Well, the whole market went a little bit ballistic with tariffs, 30% tariffs, Trump's tariffs, 30% on Europe and Mexico, which wasn't liked at all, really. But the FTSE benefited from obviously euro went straight down. We've got all-time record highs on the FTSE. On that news, we're highly commoditized anyway, and we've got the S&P all-time highs, Nasdaq all-time intraday record highs as well, which is really good. And gold is got a wiggle on, which is nice, and gold's now outperforming the S&P this year. So some pretty good returns there. I won't go over all the detail on the edge because everyone have read that. So today, well, consumer price index today to watch out for. Fed speech as well, and Bailey's speech later on this evening. So we'll find out what is going on with potential interest rate cuts. The market's widely expecting that. But today, the thing that we're really interested in is FTSE. We're going to be having a crack at the FTSE. Well, the FTSE yesterday, not only did it close its gap, it hit every single target, including last week's stretch targets as well. So really good trading. Was it yesterday? But I had to leave a little bit early, not early on the run, but early from trading. When I left, we were 3.75% up in the morning, but the calls that we did were really good. All come in really well. I've closed all mine out this morning for nearly 200% profit, and gold absolutely tore a new one as well, which was really nice. The trade that we put on, we look at that for the Dow yesterday. That you'll all know hit full target. The S&P gap that we did hit full target as well. So yesterday, probably people here probably done, I don't know, 45%, maybe a little bit better. But today we're going for the pullbacks on the S&P closing the gap and going back up. We'll look at those. Gold, we're going to retarget. We had yesterday for a 2% trade we had 33.72, and the mark went up to 33.75 pullback and then give us another 1-to-1 trade. Swissy, that one yesterday as well. Nice run down, and we're in Swissy again. We're in gold again this morning. Cable, quite interested in cable. See if we can finish it off down to the monthly and 4-hour lows, and we'll have a look at that also. So let's have a little look at what we're doing. If people are going to be mindful today, we are actually streaming on YouTube as well. So if you like the Daily Edge, you can get the Daily Edge on the website. The links are down below, I would imagine. I think they definitely are. If you want the daily edge and you haven't got it yet, you can get it to your inbox, delivered to you every single morning before 7:30. So that's the edge. Let's get into the actual detail itself. Right, get that off to one side. FTSE today, well, I'm sorry, flipping flies that will come to them and plants in the office. Just get rid of these targets that we had yesterday. So, where are we? Right, well, that was the targets yesterday's. We'll get rid of those targets again today. Right. So what I'm really interested in, you can see here, we've got the gap. Really got a good gap trade yesterday. The market has intraday all-time record high here, and we're trading above the closing gap, which is there, and the daily high is there. So the closing gap and extreme gap are close together. ATR today, average true range, is 10 pips. We want to be 10 pips away from that to close that gap. So we're kind of in the right vicinity. If you are doing the, anybody done the EB7? Anyone done the early bird trade to close the gap? Anybody in the room? Nobody? Okay. So there was the cross to close the gap, and this is extreme gap. This is yesterday's daily high, and this is the closing gap. So ATR today is 10 pips. Let's have a quick look. Yeah, 10 pips, and DAX is 41. So yeah. Ideally, I'd like it spike up to close the gap, or a direct break of this, which is a fractal. That's right on the edge. So 11 and 11. I'll put the fracker tool on. I'm quite interested in this. A direct fractal break here into the close would be nice. With a we could get away with a tight stop, but if we put 11 and 11 in, I think that would be fine, guys. Fractal break into here, into the close. That will do the job. I'm not going to look at the DAX just yet. I haven't done the levels on the DAX. We've got 30 seconds to go. I think what I'm going to do, we're on 909. I think we will go for 10 and 10, guys. 10 and 10 with a 1% risk profile. And I'll show you, I'll shout out when I'm going to hit. I do not want to get tagged in. If the market before in the next 10 seconds, that's probably going to be okay. Let's get this further down. So let's get this here, 803.3. I'd like the market to go up first, but if it doesn't, let's get this gap closed. So we're tagged in. We have an ATR stop, average true range stop. And we're going to trade this. Whilst that's moving, so you can see where we are on balance, volumes down. Hardly anyone in the market on balance. You can see absolutely, we've never seen this low before. Yesterday we were trading this, it was 14,000. So, but what we're looking for is this OBV to flip to the red to the downside and continue that momentum down. It is a very tight fractal break. And if it fails, then we'll take a 5-minute bar to the top side. The issue is with these doing these really tight breaks here is that it is so close to an average true range, in other words, an impulsive move, that we can easily get stopped out. If we get stopped out, we're going to go in, and we'll probably go in long if we get stopped out, and we're going to go in long on a fractal break up. There shouldn't be any reason why this gap won't close. but we are risk on, a bit of a rah-rah. People will be reading that there's all-time highs, and they'll be keen to do that. They'll be keen to jump on the bandwagon and buy. But there is a market function of closing the gap, and we try and close the gap every morning. So we should see a gap close. If we don't, we're going to do a 5-minute fractal to the top side. The issue we've got on the top side is that we've got C-ball right in front of us, which is an issue. So my perfect storm would be for, where's my drawing tools? Would be for this market, first of all, to come down to the close, ideally a lot lower, but if it does come down to the close, then we'll be looking for the market to put in a fractal right to the camera breakout long. Perfect storm for me today would be close the gap and get the market to exhaust on the 1 hour and get ourselves down into the daily pivot here. If we can get into the daily pivot area and camera breakout short, that would be a really nice area to buy. And be nice to get that done today. But we just have to wait and see what the market's going to give us first. All right. So, good morning to everyone that's on. Been talking to a few guys asking questions on YouTube about 15-minute buy entries and confusion over entries and Heikin-Ashi candles. So I hope those people are on now. If you are, please shout out. And if there's any confusion to what you see and what I'm doing, also shout out. If you don't want to shout out live, please put it in the chat. I'll try and respond live. If not, please put it in the comments, and I answer all comments that are posted. So hopefully we'll get an answer either live or straight after the live. Just for the guys in the room, no live. I did mention live sessions this week. Unfortunately, I can't. Spent 7 hours in hospital yesterday. Father's quite poorly. He's 88. He's got a heart condition. He's in hospital at the moment. I was in there for 7 hours and be going straight to hospital after this. So I think he's having another heart operation this week, potentially. So he'll be out for a couple of weeks. So I'll be visiting him. So we won't be having any afternoon sessions at all. Do the morning session still, and then I'll be off. Right. Come on, let's get this over, done and dusted, and then a push down into the pivot, and then we can buy that pivot. That would be nice. Let's get it down into the detail, into the 1 minute. Anybody in the room take that fracker?
Yeah, I did.
Yeah, I did.
Yeah. Hi guys. Hi, right. Oh, great. My head's swiveling all over the place. I'm just checking I think I need to cut down the amount of screens that I actually use. I keep getting lost where I am. Unbalanced volumes increasing to the downside, which is quite nice. We have a Renko block, nice red Renko block trading under both our SM and EMA targets. We have a 926 cross as well. Just to remind people where that was. So 926 cross was there. And that would be your early bird trade to trade down into the closing gap. So that's quite nice. Let's have a look at the other screens. See if I can clear some things off and get to where I'm looking. Right, yeah, we're in USD. We'll go and have a. Hopefully, we'll get this gap closed and let's get off and get round the other trades. We're 3/4 of the way there now, so make it risk-free. What we don't want is people doing fading in buys from the close. So it'd be nice if we can see this get this gap closed and just punch in and get our first 1%. Quite, I'm just looking, I've got some stats up here. I'm looking at the stats, whether probably maybe people working, but the average duration of it's quite interesting. The average duration of a YouTube is 8 minutes on a live session. I'm afraid it isn't entertaining, it's real trading. I could put a baseball cap on the wrong way and shout and throw money around. Might keep people more entertained, but really only want people watching this who are serious about learning to trade or wanting to trade. So there we go. Come on, let's get this down. I've got the bots on USD Swiss again still. So that's the extreme gap hit. That's a closing gap hit. And that's 1% in the bank. So just a reminder to the guys in the room, we're heading for 2% a week. We already made well over that yesterday. There's another 1%. If we can make 2% a week, it's 160% a year, which surpasses most rooms by a country mile. If anyone's interested in having a one-to-one, a little look round on how to do all these things that we do every single day, give me a shout. I'm quite happy to take you around and give you a little tour. If your question in that is how much money can I make, don't bother contacting me. That's the wrong attitude. It's how do I learn to trade? The consequence of that is making money. So how much money? That's one of the biggest questions I ever get asked. How much money can I make? Well, I don't know. How much money can you make? It depends how good you are, how much you listen, and how dedicated you are to learning the techniques. I am aware, Jeanette, I've not sent you my note that I said about learning. And we do have the FTSE, we do have the live expiry on Friday. So after this, I will write that note out to you.
Lovely, thank you.
And email it off and
Okay,
to
that's
help.
great.
So sorry about that. It was a
No, it's fine. I've had plenty to learn anyway, so that's yeah, it's not like I've had plenty to do with all of this.
I did when I went on our mentoring session. I did say we were going to do it, and all things went to rats yesterday. And
Yeah, no, I understand. Yeah, it's fine.
yeah, it's wonderful. Sat in hospital corridors for 7 hours.
Oh, I know. It's
Oh,
awful, isn't it?
fantastic! Yeah, and James Cook Hospital. Sick of the inside of that with one word.
Yeah, yeah, it's not great.
Right. On a good note, let's get squirreled off and have a look at the other trades that we're doing. So we had I'll tell you what, we'll just look at the live trades this morning. So on FX, well, that's coloring by numbers, isn't it? So a reminder yesterday, I forgot I left all my paintings up. That was from yesterday. If you remember, we wanted the market to pull up into this level to sell, and then we sold it. I'll just get rid of that. We don't leaving too many colors on. And we've got a one-to-one. This is a bot. Interestingly enough, on this spot, you can see it's gone and turned itself into a normal trade. That's the broker increasing the stop spread distances, which screws up some of the bots. Doesn't screw them up. It screws one of the functions up who's stopped at entries, but we all know it's an IG phenomena. They frig around with the spreads all the time. So today we're looking for USD Swiss to, I won't go into detail while we're trading it short. It's all in the daily edge. You can read all the background into that. What I'm looking for here is a cheeky 2% down into this initial support level here, and then down to 922, and eventually into the end of the week at 79.07. Got some big stretch targets all the way down here. If I just zoom right out, you can see where the market's been. It has been put in up until this point, higher highs and higher lows, but we are on a downward trajectory, and a very strong one at that. The market has then moved up, and we're in a consolidatory pattern on the 4 hours at the moment. What we're looking for is that to be broken and the market to resume its trajectory and the targets that we've already hit all previously. So this is a waiting game. What I think I would do here, we've got a 14 pip stop, 14 pip target. Then I think maybe if you, I've got the alerts there set for roughly 14 anyway. If you want to take it, you take your 1% as the market drops into there, you can. I think just move this up a wee bit higher just to give us a heads up on those tails. Cable was another one that has been performing really well to the downside. On a swing trader level, you can see quite clearly the trends intact. But with that weak pound, with that weak pound, then I think coming down into these daily and 4 hour levels, if I stick at the 4 hour levels, you'll see that pop on. I think the market's probably going to ease off coming down here. No reason at all why the market shouldn't roll off. Let's have a quick look at that Dixie overlay. In other words, we'll put the dollar basket up and have a little look, DX. So here's the overlay on the dollar basket. So you can see it's nearly a mirror image. Not quite as good as the Euro USD, but dollar basket is, you know, is set against 7 other currencies, and the three majors US.
Right.
All right, I'll just mute you, Jeanette. We're listening to your conversation. And iPad 03, I presume that's Pepe the trucker, is it? No, I'll mute you anyway, because we'll probably hear you trucking soon. So what we're looking for here, if I put this down into a bit of a lower, what we're looking for is we're looking for the dollar, and this is the dollar here, gaining some strength, sending the weaker pound down. Just have a look on the currency heat wave where we are at the moment. Just on a Richter scale, we've got the dollar at 5.71 at the moment, and the pound at 6. So it's kind of evenly weighted just at the moment. I was hoping, I'll just take this off now. I was rather hoping we'd get a bit more of a pullback, ideally into the 450 levels and above, to be able to short this. But again, I know I'll rattle on about this, but look at this. This is what we've got, our consolidation box, and we know what happens. I'll get my drawing tool out again. Bit here, a lot of size from the room. But it keeps saying this just to remind people, 8 times out of 10, if the market comes down and has a consolidation, it will exit in the same direction as it entered, in other words, down. So with that in mind, and in mind, we've got the 4 hour resistance here. We want to trade this short. So I am mindful when we've got the training accounts of just 2K. We've got to be careful of how much. Oh, right. What really? So, oh, right. Okay. Yeah. Thanks. Thanks, Irene. With one and the other, I've got one flavour with heart problems, another flavour with lung cancer, and yeah, 170 years between them. No, yeah, more than that, 175 years between them. Right. 15-minute bar. So mention to people about using the 15-minute bar. So very quickly, 15-minute bar entry. If you haven't got the guide, it's free. Go on the website and get it. The links are below. 4-hour EMA, check. 1 hour, 200 EMA, check. 15-minute, 200 EMA, check. A break and close under the 9 EMA, check. Doesn't get any better than that. Break of that bar, we're looking at a stop of 15.5, or round it up to 16, plus a spread, 1 plus another 1 to stop a double tap reversal after the spread. So we're like 16, 17, 18. So we're looking at 18 pips on a stop, and on this and Heiken-Nashi, we will take a discretionary half pip break on that. Bottom of that bar, just check the bottom of that bar. We're quite happy to do this visually. You can, well, let's just take that. Actually, I think that's good. I'm just looking, what I'm looking at here is the bottom of all these candles. A nice rejection, a nice bar coming in here. Can I put that? I just want to show people on that, on the guide. A pictorial representation. There we go. Put it on a different screen. Heiken-Nashi, 15 minutes. Strategies. I'm just looking through the Learning Center. Terminologies, strategies. 15-minute bars. 15 minutes. 15 minutes. Probably got too many strategies here. Got something for every season. I can't see for looking. It's right in front of me, isn't it? Flipping heck. Right. Okay. Right. Pull this up. So this is a 15-minute strategy. If you want it, it's in. You can get it off my website very quickly. Free resources. Scroll down. There's quite a few different free resources here about managing risk. A report on 30 million closed trades, over 100,000 traders, all facts and figures, why people actually fail. Difference between SMA and EMA. I've never used SMA, throw that in the bin, that's for swing traders. The importance of most emotional intelligence in traders. That is number one reason why people fail, lack of emotional intelligence and discipline in trading. So here we are. The trading guide here, just click that one, and then it's zero cost, and then just download it. Simple as that. This is what you get. Let's zoom right up. Right, so tells you about the what to do, what to do, why to do it, the different, moving down in sequences on timing, what exactly you're looking for. And then it shows you the interesting bit, these candles. This is an example for going long. So the inverse is the same for going short. So everything going long, green, everything going short, red. So we do have this bar here is the best bar to follow, the 9 EMA. We do not take breaks of the middle and of any Heiken-Nashi candle, and I'll get a lot of comments at the moment of people saying, oh yes, but is it a break? Is it the middle? What is it you actually do? we actually take a break of a Heikin-Ashi bar, not the middle, no such thing as the middle. I don't know where that comes from. And we use a 9 EMA, and people are asking me, well, why don't you use a Fibonacci 8 EMA? Oh, why don't you use a 21? Why don't I actually use a 5? Why don't? Because the 9 EMA has been proven to be the key EMA for me, for trading, for day trading in the time scales that I trade. So I use a 9 EMA. If you want to use a different number, Philly boots. Experience has taught me, and the profit and loss has taught me, use 9. Everyone always knows better, and they always try and use different, or they come up with something manufactured to demonstrate maybe a new fangled number is okay. But those things we hold to be true as traders, you need to stick by them. And 9 EMA, you will not go wrong with a 9 EMA. I do need to do a video on a 9 EMA, and I will get round to doing that. There are plenty of videos on 9 EMA on YouTube. If people have the patience to go through the lists and look at them, they are definitely there. So here we are, perfect bar. I won't labour the point. That's the perfect bar to break down. And the target that we would like to get, rather than the 1-to-1, we're going to go for a little bit more. Risk 18 pips for 26. And that will give us a potential opportunity of 1.44%. We've already got 1% in the bag, as you know. So that's cable. We'll put an alert up into these levels. So if we go up to the top levels here first, it'll negate our trade going down because the fractal structure has changed. So this is the USD Swissy. You are looking for 14 pips coming down here to take your first 1%. So if you want to take another 1%, that's potentially on the cards for you there. We've done 8 pips out of 14. By what we need to do here is do a little bit of risk management, make sure we can make that free, and we're going to override the bot here and put another 1 here on the bot. So if you've got your bots, if you're in and IG has screwed up your bot stop, then just change your bot stop to +1. So if we lose, we win. And if we win, we win an awful lot more. So we're looking for 19 here. So we are now in a completely risk-free. I'm just being a bit pedantic there. I just want to go in jumps of half pips. We cannot lose. If we lose, we win. If we win, we win more. So that's a perfect risk management situation. The bots are the bots, and hopefully we'll come down for another bot win. Gold. I tell you, everyone on YouTube is very quiet this morning. I think they must be watching it from work. Right, so gold. Let's zoom out on gold. You'll see this morning I had gold on this morning. Where are we with gold? So at 6 o'clock this morning. I had gold all the way down here, down at 33.45. It was just sat on too much money for me. So I took all the profit on that. I don't know if other people did, but put that back up there. And so the market came down into a bit of a 1 hour area here. We had these reversal pins here and here. Yesterday we traded this up to 33.72, and the market went up to 33.75. Nice, lovely trade, straight into profit, and then the market came back down again, and then provided some nice 15-minute bar action in the afternoon if you wanted to trade that. Let's get rid of this. This is all targets that we've hit. Sorry about that. Should have cleaned it up. Ultimately, I would like to try and think we can get to 33 88 today. And the things in the way of that are to help it run into that.
Alert trigger.
Will be the CPI numbers at 130, which comes out on Canadian dollar as well as the US dollar. So that could really move the markets today. So don't forget, if you are in the US markets at 130 and your bot's running, if it hasn't, there's another bot there running there. If it hasn't run into full profit, if it hasn't run into profit and put the stop to entry, take the profit, switch it off, bank your money, wait for the announcements and the fluctuations that ensue after CPI announcements, and then get back into the markets. Do not leave a trade on economic announcements. That's what amateurs do. Take your profit or reduce your risk as far as practicable if you can't take your profit on announcements. That's a good way of losing money. You can make money really quickly. We do have strategies for certain things for spikes like expiry, EOMs, EOQs, non-farm payrolls. But for consumer price index stuff, market sentiment rules rather than technical spikes. So we'll leave that alone. So this morning, I was watching this come up. I traded from here in the morning. If you'd actually traded the gold early doors this morning, there was a really nice run early doors. I guess all the Aussies will have got this, and then there's another 4 o'clock bar there. It was too early. I got in on a pullback here, as you can see. There's a fractal break here, and it's a 1, 2, 3, 4 pip top-in pattern here. So I've got a fracker break here, and I took the profit from my trade was down here, which was nice. So another 15-minute bar here. So again, I just clean this up a little bit. We've got that alert triggered. We're going to have to go to alert triggered. I think that's Swissy telling us we've got 1%. No? What is it then? Wall Street. Okay, well, we'll go into the Wall Street closing gap yesterday and the S&P, but we'll do that later. So, right, let's get back to gold. So here's, well, you can see a 15-minute bar. So a 15-minute bar, beautiful 15-minute bar, boom, there. Obviously worked. Another 15-minute bar was really good. Work there, pull back, another 15-minute bar there, that worked. Another 15-minute bar here, based on the 15-minute guide principles. So if you are not in, just have a quick look up here. I don't want to overstretch the training accounts. Right, fair dues. Right, so I've got plenty of headroom. Plenty of headroom. Right, so there is that 15-minute bar break. If you haven't done it, will be a direct break of, let's take the fracker off, so doing 15 minutes. We're already in, so I'm not going to trade it again. We're at 2% on the bots and 2% on the manual trade this morning. So if you are not in, then you can get in with a 6.5 pip stop, spread 0.3. So a break here. So the bar is, top of the bar is 33.63.5. We can do a spread break, so that could be 63.5. So if you want to get in at 63, set your 63.5 there. And your stop needs to be under at 6.3, spreads 0.3, so that's 6.6. and then another 0.3 for the extra. Well, you could just put that as 7, really, couldn't you? So 7 pips, and you are heading right back into 72 again. So there you go. You got a nice, another 1-to-1 risk reward. In fact, I'll just do that 1%, 7, just to show you. We've still got a lot of the naysayers on they apparently have done lots of testing and saying the 50. This is one that'll make you laugh, guys in the room. Guys, that's saying the 15-minute power reversal doesn't work. Oh, it's not consistent. Incredible, really. Maybe those guys that think the 15-minute bar doesn't work because they've done all the back testing. Maybe you want to come in the room and we'll prove you wrong. Works very, very well. Well, you can just see the 15-minute bars here. We don't need to prove it. There is 15-minute guides. Please, if you don't believe it, get the free guide. Practice it yourself. It really does work. There's a bot.
Alert triggered.
You can see the writing coming up to illustrate it. If I hit that, the code will open with the engine. There's a fractal engine here that this code pulls up, and it just goes in and mullers the market and takes money out for us. And I leave it on nearly 24 hours a day, every trading day of the week. It's really good, and it's just keeps ripping rupees at the market for us, which is good. I won't labour the point too much on this. We'll just put an alert to show when gold triggers off again. Let's have a look at, so we've looked at cable, we've looked at pound Swissy. We're in we're waiting for the FTSE to come down further, aren't we? We've got some alerts for that. Let's see how far the FTSE has come down. Well, you can see it. You see what I mean here when I said before we get people who buy the clothes. As we fade in, you can see these spikes. The markets come down and people are starting to buy. You can see the people here trying to buy the FTSE. And at the moment, we've got a bear bull fight here for people trying to buy the clothes, trying to buy value. I think that really does need to come down a little bit further before we get interested. We've already took our money out of the market, took a couple of minutes and we got that money. But I think if the market we should get interested around about the 2-day high. It comes down to the pivot. That's the bullseye to look at buying. And if you wait patient enough, guys, that trade will come to you. US 500 from yesterday. Well, I think I'll put the levels on now. Yeah, I have put the levels on. The market absolutely smashed all the targets, which is really, really good. If you remember yesterday, did I record it on the snapshots? Just have a quick look. Is anyone still in the options at 1850? 1851? No? I'll show you where they are at the moment. Gold we're walking a dog yesterday, closing the gaps. Gold, FTSE, that's too far back. No, I didn't record the US 500, but it's in the recordings, guys. I'll download them. You can have a look. In fact, because we're recording this yesterday, I'll make sure I put those in the whatchamacallit. You know, the thingamajig. What was the raw and uncut, in other words, recordings of these trades. I'll put that yesterday I'll upload yesterday's trading session raw so you can see exactly what we did raw and uncut. That's something I've started doing on YouTube. So if people are interested in watching the real room with all my mistakes and what goes on, then pull that down here. What I do have here is playlists. Here you get live and uncut. There we are. That's what it's all about, live and uncut. And trying to do 1 or 2 a week every week with all its losses and wins and whatever, just to show people and stop that working, just to show people what the live trading room is like. In my live trading room, there is nothing polished, and it's all the trades that we do raw and cut. You might learn some strategies on that, and just to prove everything we do is recorded, everything. So unfortunately, I can't make wild claims because someone will always pull me up on it because it's all recorded. But there we go. Not that I would. But some of the things we do in the room, I wouldn't want to put on YouTube, to be honest, because no one it'll attract all the trolls, because we do remarkably well. But yeah, if you look there, live and uncut, I'll put some more on there, and today I'll upload those before I go and do me visiting. Right. Put that back up there because I'm going to need that a bit later. So what did anyone in the room follow me on the US 500 and do that trade? No, nobody. I just did it on my own. All right, okay. I won't labour the point then. I won't labour the point that we made an absolute killing. So today it's closing the gap coming here, different from yesterday, because yesterday we were running with momentum to close the gap. Today we're going against momentum, a pullback. But as you observed with the FTSE, it is a market function to try and close the gap. In other words, it's not like FX trading at all. Index trading is the cash hours. So where FX is nearly 24 hours a day, index trading, especially the FTSE, Northern European markets, they do not trade any cash trades until 8:30. There is pre-cash 1 hour, but let's just say the market opens at 8:30 because it does, and it closes at 4:30. They're cash hours. So we get a market close here and a market high, market low. And when you see the market traded higher up here, these are not actually traded in cash hours. These are what's called the market is being made, because all the different indices are interconnected with other indices around the world. Everyone's got a fair value against a different currency, a different commodity, or a different asset of indices. So they're all like a spider's web, and they all get pulled around. Where the FTSE finishes at 4:30, and that was the close at 4:30 yesterday, the Asian Pacific market and American markets pull the market up above the close or below the close. And like this, the S&P, the Asia Pacific markets pulling the market up, and the trades that we're doing now are pulling it around as well. Again, the gap was, you can see the gap from the 10th of July was closed there. I'll take that off as well. I'll put that in the report anyway. So we have a market inefficiency effective, not an inefficiency, but a hole in the market. And ideally, when the market closes at, if it's American market, we talk about UK hours now, relative, would be 9 o'clock. What we want to see, or what the market makers want to see, is the cash hours, the cash trades to come down and finish off where the left. So the close needs to be closed and the market continue on. Like we did on the FTSE, there was a cash hole. We filled that hole. It's now been filled. and the market's now free to either move to the top side or to the bottom side, depending on what traders want to do. But now we've got an efficient market.
Alert triggered.
We have closed the gap from where we finished last night to where we are in cash hours this morning. So that gap is to be closed. I won't be around. I won't be around. So there is a gap to close this daily high. Can anyone remember in the room what what we call the daily high? When the daily high is above the close. So that's the closing gap.
Extreme gap.
Absolutely, yeah. Oh God, Simon, that was reluctant. It was like, for crying out loud, no one's gonna say I might as well. But it's absolutely right. I know it's a trading room, but a training room as well. Got to labour the point until it becomes absolutely second nature. You know exactly what all these pivots are, what happens around them, which are important pivots, which are not so important. So actually, you know in your mind's eye. So deep sigh, Simon obviously knows it inside out, upside down, knows what the extreme gap is. Everyone needs to know how to observe, find what an X gap is and what a closing gap is, because these are targets that you're going to be using as a trader. FTSE, still not coming down. It is sat, as you can see, on the close. Now, if you don't use these pivots, again, if these are only, I've written these pivots for Pro Real Time. I haven't written them for TradingView, and I have no intention of doing it for TradingView because I use Pro Real Time. But if you do use PRT, you can get those pivots off the website as well. So I'm going to hide those. So if you don't use cash pivots, kind of flying blind, aren't you? Why has the market stopped? You're just guessing, aren't you? You just don't know. You're kind of looking up. Oh, it might be because of this. It might be because of that. But the market's closed because a gap in the market has happened. Boom, there. And the market's reacted off that point there. So if you're an index trader, you need to understand these gaps, because if you don't, you will not be you won't be a consistent trader. You won't make money on indices. Right. That alert triggered this time was the Swiss USD Swissy. Did anyone take? Oh, it's not quite there. So it's, oh, you know, since we've banked 1%, if this comes down, you can bank another 1%. We've had a bit of a retrace back. I'm quite happy just to leave this and see how far we can go. It was 1919, this, wasn't it? Why have I got this in? No, it wasn't 1919. Oh heck, I forgot what I did. Didn't write it down. Here we are. It's good job of post these things, isn't it? 14 pips.
Alert triggered.
Right. 14 pips.
Alert triggered.
So 14 pips would be here then, wouldn't it? Let's just have a measure at that point. Something, doing all these trades in 1 year, 14, yeah. So if you've got your bot on, leave your bot on. Comes out at 14, you could actually take a strategy. Could be that you take your profit at 14, a 1% profit. You then could move into 5-minute frackers. So you can put your fractal tool on, and you can see a fractal break. See, there's a first fractal break here, as you can see. And you do a 1-to-1. That's worked. There's another fractal there. That broke, and your stop would be where this stop is up here. Once you've hit your profit here, you could wait for your next fractal break and trade it. Now, if you go back where there's some clean stuff, you can see the fractal breaks here coming down. No. That's not a good example. It's not in trading hours. Let's have a look. Trading hours. Let's go from the morning. What morning? It's 8 o'clock. So their trading hours. Fractal breaks. 5-minute frackers. There you go. You can see that gap there. That would have won quite nicely if you'd used 5-minute fractal trading. Another 5-minute fracker there. 5-minute fracker here. That would have got stopped, to be honest. Fractal breaks here would have won. Fractal breaks here, one. Fractal breaks here, one. Fractal breaks here, one. Very high probability trading using frackers. You just got to know when to switch them on. And it's okay to switch them on now. Once the market's proven itself, maybe take 1% here, take your frackers on and frack it all the way down to 79.38 and then 7922. Ignore this. This is a bot, and I'll just take the money anyway. Right, so we've got cable that we were looking at, USD Swiss that we're looking at short. Wow, look at this. That's one the alerts. The beauty of using alerts. So you can see here, we didn't get clicked in. So we've now broken the fractal. That's been negated. Delete that. Delete that. Zoom out. This is where I mentioned this morning. I think I did. Did I? Yes, I think I did. I wanted 13,450. Ideally. Yeah, ideally 13,450 to 13,500 or 1.345. It depends what systems you're using. We're using spread accounts here. So, yeah, so it's now coming into the range that I would be very interested in trading. The bar that we had set up was a really good bar. It didn't trigger. That's absolutely fine. That's what keeps the money in the pocket. An alert, I think, into the bottom of this previous, so 351. I think I'll put it into the top here. Let's see what we can get. Let's just zoom out a little bit further. And let's just have a look at what the retrace levels might be, because we can alert some Fibonacci retrace levels as well. So we'll do a Fibo on a 1 hour. So 1 hour Fibo will be down here. So it's in a 38% retrace level at the moment. So if we can get a 61% retrace, that would be good. The alerts on the 50. If the market comes up, we don't need it. We've made all our money. We've made our 1% we need to make anyway. We've got guaranteed trades on USD Swiss. Don't really need to do anymore, really. It's always nice just to keep making money all the time, which is good. That alert triggered was gold being triggered.
Alert trigger.
Triggered again. And I put that extra one in just to show you. That is the 15-minute bar there. So hopefully if people wanted to see the 15-minute bar in action, there's a 15-minute bar in action twice, just to prove that it isn't just a fictitious document. We actually do use it in the room when we're trading live. So we've got quite a bit, quite a few trades on here. We've got that's the bot. We've got 3% loaded on here, which I'm not particularly happy about. I like to use 2% manual trades, but I've done that extra 1% just to prove, well, really prove on YouTube that we do use these systems and how to use them. And also, if you're following it and didn't do the early trade, then give you the opportunity to trade gold with me and with the room. So I'm not going to labour this morning's session too long. You could USD Swiss. I'm just going to look at these AI, these filters. Is there a perfect storm for 415 reversal? There is a perfect short setting up for cable. That's waiting for the perfect short. We know that. Kiwi USD, there's another one setting up there. But that'll be negated because of this line here. Pound euro. Well, that's moving quite slowly. CAD Swissy. Other things are interesting. Pound Swiss, pound Kiwi, CAD Swiss, and euro CAD would be all bearish today that I've got down my filters, and Kiwi Japani, Euro CAD, and Euro but we do like trading Euro Japani. Euro Japani is potentially a nice, should be long based on macroeconomics and sentiment. JPY, is it technically long as well? Euro Japani, JPY. There we go. Yes. Yes. And yes, when we trade in the room, trade 5:30 onwards. So we're looking around just after 5 for a signal. You can see there's one there triggered at 4:30. Beautiful bar. If you can get such a thing as a beautiful Ikenashi candle, and there's one there, there's an even better one here. We are trading above the 9 EMA, and that will show. Let's have a look. Oh, I got it here. That entry again, open up with a 15-minute guide. There it is. Scroll down to the candle shapes. There. Look, that is the candles. Beautiful trade. Don't need to draw that in. Anyone can see it's a one-to-one risk reward here. Another one there. Beautiful 15-minute bar. Now that 15-minute bar is above the 9 EMA, but the wick is it's longer than a body, so we'd wait for something a bit better. So there's something a little bit better. Do we want to trade this? Zoom right out to see if there's any headroom opportunities. Zoom right out. Let's have a look. See where we are in relation to tops. Do we want to continue? We're overcooked on the weekly. Mind you, it's been overcooked for quite a long time, hasn't it? I've obviously identified that previously on the daily charts where the highs have been from previous trades that we've done. So we've still got the headroom. The issue we've got a BRN in front of us where markets trade to and from, especially on Euro Japani. What I mean by BRNs, big round numbers, you'll see markets stop at BRNs. So 1700 there. For people front running, the big round numbers and the ones. Can you see there? Drop back to ones. BRNs. Always remember big round numbers. Markets bounce off them, especially on the Forex. So you would want to trade this. If you're going to trade this, if you can't get a one-to-one before 7,300, then you would walk on by and leave it. There's a fracker break here as well, 15-minute frac as well as a 15-minute bar. As in the 15-minute frac there. As a 15-minute frac here would get you a stop of 31. Would that get you in? No, not quite. So you probably wouldn't take a 15-minute frac from here. If you took the 15-minute fracker from here, and the stop there would have been 22, 22, 25, then you've got the headroom to do a one-to-one without any problem at all. Don't forget, in here, we are day trading. We're not swing trading. We're day trading. I prefer to be accurate, precise, get in the market and out the market for the biggest bang that we can really, or at least a minimum one-to-one. To do that, you've got to be precise, not just about looking at big 4-hour and 1-hour levels and get you 1 or 2% over a period of a few weeks, few days. We can get multiple percents a day, every day, doing what we do here. But I liken it to the difference. Carpet bombing, I would say, would be the accuracy you need is World War II carpet bombing of a city. Try and get a trade off and be okay. What we're doing is flying Tomahawk missiles through a window 1,000 miles away. We are precise. We go in, we use one trade, take out our target and get out. So that's what we're doing in the room. Wow, everyone's really quiet today, aren't they? Don't think there is anyone on YouTube watching. Right, so let's get back to gold. Gold's making money. We're probably going to make quite a bit more on that today. We could end up with 3 or 4% today without too much of a problem. So we know where we're going with gold, and that just continues. USD, Swissy, all completely free, and we're heading for at least 1% and more. Don't count the bots, just count the manual trades. So that should chuck another 1% into the bag. Cable, if it runs up high enough, let's give it a tap. And especially if it gets to 13,458 area, we get really interested there. The big level that I would like to see would be 61.8% Fibo retrace to knock this down into this target, but that's not going to happen in the live session. FTSE needs to come down. It's just hanging around, isn't it? You can see the bulls are trying to win out here. We're in the micro level 5 minutes. However, if this momentum follows through, and it's not looking likely that it's going to, you can see we've gone from 600 to 3,000 now on the OBV. 15 minutes. If you see a 15-minute bar shaped in the colors that we've just gone through using that 15-minute guide, in other words, if we have a 15-minute bar close above the 9 EMA, you can take that and take it right up to the camera of the breakout long into the 9.36 target. I think the market should come lower. I think it probably wants to come lower, but the market is, no matter what we think, the market is always right. Even when you think it's wrong, it's always right. It's the result of what the masses are doing and trading. So, oh, hi, Greg. There is life there. So, yeah, this is a matter of time. Wait for the 2-day high to come down. Ideally into here to trade. We've already made 1%. Let's see if we can make take another 1% out of the FTSE. I did say before I go with those calls that I took my money on this morning. Yeah, so these are the 18 calls that we took yesterday, or I took by the sound of it. Doesn't sound like anyone else in the room took them, and took 140% out of that. So that was nice. You can leave them in if you have got them. You were in the room yesterday, but not in the room this morning. You can easily leave those in and see if you can get any more money out of those. You taking it up to the 50 levels, which is, as in, I've got enough data in here now. Not IG still hasn't got the data up yet. Nope, not enough data yet to make it useful. No. So we got in at a very low level yesterday, and I come out this morning for around about 140%. Quite happy with that profit. Today you're closing that gap on the US 500. I'll look at the Dow before we go. The Dow yesterday. Did anyone do that Dow setup that I did yesterday? Anybody? No, you just watched me. Oh, that's okay. You don't have to do the trades just because I do them. So you can see the market, did it close its gap from the areas that we spoke about here? Oh, hell yeah, straight into the at 230 on the right on the nose. Boom. Nice. 100 and what was that? 100 and did I put it on the room? I mean, let's look at the recording. I'll put if people are watching this on YouTube, I'll do the live and uncut yesterday so you can see exactly what we did, how we did it, and how we made, I don't know, I'm not counted up, over 5% for the day. Today we're looking to close the gap at today. Oh, this is yesterday's. I've not done the figures for this. Is anyone interested in me in the room? Me setting the gap up for today for the Dow gap? I'm quite happy to do the pivots if you want me to. Quite straightforward anyway, guides, aren't they? It's just a matter of cranking the handle and doing the trade, really. We've got a 85% chance of the gap closing today, a gap trade. So I think it's where is the do you know what? I'm just going to put I'm intrigued to see where the gap closes today. I'll just put the figures up. So yesterday's high was 80.77. Previous low was 44,275.25, and the high, just reading the high now. The high was 72.13, and the low 44,237.28, and the gap, the actual close, is 444.59.65. Right, I'll just save the pivots. So where is the gap? Right. Very high probability trade now. Just zoom out. Right, so I can see where the cam levels are. Okay. Anyone in the room? Can anyone in the room, and don't, obviously not YouTube, because the guys on YouTube don't know the strategy. Anyone in the room know why this is going to be super high probability trade today? Right, okay. The trade today, if the market comes down, so there's the close there, and this is the daily pivot. We're 70 pips away from the daily pivot. Our trade needs to be between 110 and 55 pips. If the market comes down to these levels here, which is now a support area on the, I think, on the 1 hour level, Market has been down here before, and we are getting towards 230, in other words, 215 area. And the market hopefully will continue coming down a little bit further. It will be supported from 15 minutes all the way through to a day in every single time frame of upward momentum going forward, depending on CPI announcement at 1:30. If it's in favor of this gap, then the market will close up pretty quickly. For this gap trade, what we really need today is a CPI that doesn't excite anyone. In other words, something that comes in exactly where it says on the can. So we don't get any big spikes in the market. Big spikes in the market. We don't like big spikes in the market when we're doing gap trades. We want the market just to be pretty nonchalant about the trade. We want the market to come down to the daily pivot, and we want to take a trade above 44,383, which is the exponential moving average 200 EMA, and we want to take that trade right to the gap, and let's get that gap through. We've got 1 from 1 this week already. We can get 2 out of 2. That'd be nice. The best we've had is 16 out of 16. The worst we've ever had is 2 out of 2 that have failed. So pretty high probability trade. There's the Dow gap. The US 500, obviously, again, predicated on flat news on CPI, but that close needs to get closed. The market pulling down here will be really, really nice. Don't forget, if the market does pull down, it will have an effect on the FTSE. However, the biggest effect would be the Dow. So if the Dow flies up, the FTSE will get dragged up in the afternoon session, because there's a high correlation between the FTSE and the Dow price action in the afternoon. In the morning, there's a high correlation between the NASDAQ and the FTSE. So if we look at the NASDAQ, you've got the NASDAQ flat here, going up and down, up and down. If you look at the FTSE, see a similar pattern. So you can see, we'll do an overlay on that. Can you see that? As the FTSE is moving around, there is a high correlation when the market goes to cash. As soon as the market goes to cash, there's a high correlation between the NASDAQ and the FTSE. So if the FTSE is moving around up or down, the NASDAQ will generally follow it. In the afternoon, when the Dow is running, you'll find there's a correlation. If the Dow moves up and down, it will help pull the FTSE. The other thing that helps pull the FTSE is the energy stocks, namely oil. Right, I'm going to go, and let's have we are USD Swiss doing nicely on USD Swissy. Gold, it's all green on gold, I think. All green, well, nearly positive for making rupees on gold. USD Swiss, all positive, making money on USD Swiss. We've already made money on the FTSE. We're waiting for cable to do its thing. So Edge said USD Swiss would come down. It's come down. We're waiting for cable. Gold, it said gold would go up, and gold has gone up. It said the FTSE gap close needs to be closed first and won, and that's exactly what happened. and we've got targets to go for on the FTSE a little bit later. USD 500 said gap close, so hopefully we'll get 5 out of 5 again, but we'll see. Any questions, if anybody, before I go? Don't forget, if you're watching from YouTube and you might have an interest in learning how to be more consistent, or want to learn how to trade consistently anyway, give me a shout. I'm quite happy to give you a bit of a one-to-one tour to see if you're a fit for the room and if the room is something that you think you might benefit from. Any questions in the trading room rather than YouTube before I go?
Nah, thanks, Steve.
No. Okie dokie. I will see you all bright-eyed and bushy-tailed tomorrow morning. All right, guys. See you later then.
Thanks, Steve. Thank you.
Bye, everyone on YouTube.
Bye.
Bye. All right.